Welcome to this video on the latest day trading tip that I'm going to share with you today. So today's day trading tip is for beginners. It helps with your psychology. It's for really intraday trading indexes. This is where it works the best. So as you can see here, I've got the E-minis, S&P E-minis on the bottom. I've got a 2-minute chart. You can vary this depending what you want, but I do use this for intraday trading. Now, here's the key. Over here, I have the advanced decline line, and I use the same time interval. So the advanced decline line is a breadth indicator, and it's basically a index. It's calculated by the number of advancing stocks less the number of declining stocks, and that's pretty much it. Okay, so how are we going to use this? We're going to use it to get a little bit of an edge once in a while. So I will tell you right away, this is not something that's going to help you on every single trade, but it is something that can give you a heads up sometimes before the market you're trading does. And that's what we're looking for, some kind of an edge, right? Okay, so the first one is we gapped up this day. And notice that on the S&P E-minis, we get a higher high here. But on the advanced decline, we get a lower high. So that is a heads up. That's a little bit of a leading indication. Now, remember, this is not really an indicator technically because it's not taking the data of the S&P E-minis and running it through some sort of mathematical calculation. It's really just measuring the statistics. So that's the difference between an indicator and statistics. It's an index in and of itself. So the advance versus decline issues, meaning stocks, not following through here. And so that would be a little heads up that, oh, wait a minute. Okay, about 50 minutes into the trading day, we've gapped up. And maybe this puppy is not, maybe that's it. Maybe that's the end of the story because we see the breadth indication here not following through to the upside. All right, so there would be one. All right, now a lot of times it's going to follow pretty similarly, but then other times we're going to find other times when they are not following through. So here, for example, we see these highs coming up here, and here match these highs. We got them there. Okay, so for the E-minis, for the S&P, this is the market we're trading, by the way. So we're not trading this market, we're trading this one. And we see that we basically have equal high, equal high, equal high, equal high, but not so on the advanced decline line. So here, by the way, this is an important point too. I make it into candlesticks. You can actually turn it into a line if you want to. Technically, it's usually called the advanced decline line, and they draw it as a line. So this is a little different thing that I like to do. I like to actually have it plotted as candlesticks so that I'm seeing apples to apples. But however you want to plot it, that's up to you. So we see, okay, first of all, hitting high, but then even though the S&P E-minis is still hitting equal highs here, no. On the breadth indicator, we're not making it up there anymore. And so that, again, is showing an early indication that, oh, maybe the strength that's showing on the market to the upside might not be sustainable. Might not be sustainable because underlying that, when you measure all of the individual stocks, those that are declining and those are advancing, looking at the difference between those, they're not holding up. They're not holding up at the same level. And so, nice little tip there for you. It's something that I use. I look at when I day trade the equity indexes. So if you're trading Forex or if you're trading individual stocks, this is not going to be as helpful. I don't even think there is anything like this for Forex, or at least not equivalent to it. And so this is not really for Forex. This is for equity trades. And again, individual stocks is not going to work as well with. It's great if you're trading the S&Ps, you're trading the NASDAQ, you're trading the Russell, big indexes like this, because that's really what you're looking at is the conglomeration of all these different individual stocks put together and plotted as one index. All right, so Nice tip for you there. By the way, if you found the video helpful, feel free to give it a thumbs up and share it. Share good things with good people. Really appreciate your comments, your encouragements. They keep me going here to create more free tutorials for you. And I've got my rubber band trade still available for you. So if you want to get a complete trade strategy from me, complete with entries, exits, all that stuff, then just go ahead and click that green little box in the top right hand corner, and that'll send you to the page where you can go ahead and get the rubber band trade strategy absolutely free. And in fact, I include 5 little videos. They're each about 15 minutes long, and I give you some distinctions there on how professionals trade differently than amateurs. And then also I give you the rubber band trade, and I want you to take it and start making some money right away.